So Starbucks reported last night after the close and held a call. I characterize the quarter as low quality. They're still down double digits from 2019, so the business hasn't recovered from 2019, which is why they are going through this process of, reimagining the company. And the note that I'll have out this morning on Starbucks is basically going to say that 2023 is a transition year. So they outlined five points for how they're going to reposition the business. Three of them are essentially soft, I'll call them soft issues, because they're trying to stem the encroachment of unionization on their employee base. And the other two are going to cost them money next year. So they're going to have to reinvest in their employees. They're spending more money in labor costs this year. They're going to spend more money in labor costs next year. And then they're going to have to reimagine the store base. So they're going to go through this big issue of, we don't know the details of the plan because it's all going to come September 13th, but I'm projecting that, reimagining the store base and putting a lot of technology in the store base is going to cost a lot of money. It's going to be expensive. So margins are probably going to be down again next year. CapEx is going up. Margins are going down. It is a quad four stock. And I know we might see a few more quad fours for a few more quarters, but I just think we got to get through September 13th and the company guiding down at that time. And then maybe we can think about going long at that point, but I'm a little nervous going into the September 13th.
What's interesting in what you said, and I was back and forth with Lizanne Saunders, who I have a lot of respect for as a strategist, on Twitter this morning. She was showing the S&P 500 EBIT margin line versus the initial collapse or bear market in stocks. So part two of the bear market stocks is just the blue line on that chart, which is EBIT collapsing. If we have quad four for the next 4 quarters, earnings get quad forward. So and you said Starbucks, just because I tweeted back actually as you were giving people an education this morning, with numbers, which is great. Rate of change on EBIT for Starbucks. Did you say down 396 basis points?
Correct.
That's not down. Like if you look at that blue line, like peak EBIT margin, we're literally coming off peak cycle EBIT margins for the S&P. And part of that gets pent up because Jay's companies and hotel companies and energy companies are printing like 350% earnings growth. So that, like, looking backwards is like, oh, earnings are great, stocks are cheap. But that thing's going to collapse. I mean, you're already having companies collapse, and Starbucks margins are obviously collapsing.
16-ounce cup of coffee costs almost $4 at Starbucks today, right? Like, it's gotten out of control, the pricing here. I can have a cup of coffee for $1 right here. So this is coming, right? The slowdown is coming for Starbucks, which is another issue we have to deal with.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.